Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Many of America's malls continue to struggle as the popularity of online shopping grows. But a new report from the Wall Street Journal says some landlords want online startups like Warby Parker and Untuckit to become tenants and fill up their empty space. Will it revive retail as a strategy? Joining me now, Jeffrey Roseman from Newmark Knight Frank and Hitha Herzon, retail analyst at H2 Research, both at Post 9. Welcome to you guys.
Thank you.
Hitha, in a way, it's funny that this is such a big story, but this idea that you would take a Warby Parker and put it into a shopping mall, I guess seems strange because they started as online.
It seems strange if you think that that is where it only exists. But right now, where the consumer is going, they want this experiential shopping experience. So that's not just online. They want to go into a store, look at the glasses, feel the glasses. True, $96 billion was spent online just on shopping last year during the holiday season. But now people just want that experiential experience when they go into shopping.
But Jeffrey, here's the interesting thing about it. So brick and mortar is dying because of online, and yet it looks like the two are coming to resemble each other quite a lot. So how much of a difference does it make if you started online and have a few stores versus starting in stores and having a little bit of an online presence?
Well, I might debate the first part of that brick and mortar is dying, because I'm not sure it truly is. I mean, there's certainly a lot of hype about it. I think retailers go in and out of business every decade. We've seen it a lot. I think what we're going to find, and we're still sort of early in the process of sort of online shopping and versus bricks and mortar, but I think what we're going to see, the most successful retailers are going to have the combination of both, a good omni-channel platform of online sales as well as brick and mortar. I think customers still want to be able to go into stores. Yeah. And I think even lately, companies like Walmart just announced that they're working on ways to get the customer back into the store. Amazon is now working out a deal with 7-Eleven where customers can go in there and return things. And so I think, you know, we're still in the infancy stages of it.
I wonder what it means, Hitha, for the mall owners, for the landlords. It would seem as if this became kind of a prevailing mode of trying to fill gaps in your mall. It's a little bit more unstable, maybe a little more shorter term. Is it enough to worry about that this is the way the business is going for the mall owners?
I don't think there's anything more unstable than seeing a JCPenney go out of business. True. Or a Sears, or these stalwart department stores just completely vanish. So if anything, having these smaller stores and their presence in there, even if they're paying, you know, $20,000 a month for the 1,900 square foot that they're hanging out in, it's money in. And is it going to have an impact on REITs that are now losing money on the stock market? You see these numbers going down. Probably not. I mean, Moody's was saying that it's not going to have a huge impact on that.
Jeffrey, what do you think in terms of how lucrative it is for one of these newer upstarts to come into a mall relative to, you know, one of these long tenants?
It's great. I mean, you know, and it's not just malls, by the way. It's urban streets. I mean, you know, walk up and down the streets in New York, and you're going to see pop-up stores and new concepts all the time. It's a great way to fill space. It's a great way to add excitement to the mall or to the building, wherever it is.
Do they pay less, or do they typically pay more than?
You know, I think it depends on the situation. There are certain owners that definitely have a better vision and say, you know what, I want to bring this retailer in because he's going to add life to the center. And those tend to be the most successful, the more the nimble.
Should the owner-operators, though, I mean, in many cases, not just in New York City, but there's a lot of shopping malls, developments where the owners do not want to cut rent because then it affects their valuation in the market, and of course they lose the cash flow. They'd rather leave things sitting empty, and that's been a plague. Should they now accept, okay, lower rents, more month-to-month kind of things? Have we come to that moment?
Right. Well, the reality is we've been over-mauled for the past 10 years. You know, I mean, there's going to be malls and shopping centers that are going to close, and they should close. And there's retailers that should have closed probably 10 years ago that are closing now. It's not, I think we've all seen it coming. So the fact that some of them are closing now, it's sort of the perfect storm. Everything's hitting at the same time. But
sounds like it's making them all a little more exciting again. I like the new stores. We'll see how it all works out. Hitha and Jeffrey, thank you both.
Thanks for having us.
Hitha Herzon and Jeffrey Roseman. Time now for a CNBC News update. Let's get back to Sue Herrera. Sue?
Kelly, thank you so much. Here's what's happening at this hour, everyone. Senate Republicans have decided to include the repeal of the Affordable Care Act's requirement that most people have health insurance, and they're going to include it in the overhaul of the tax code. They are now merging the fight over health care with a high-stakes effort to cut taxes.
We're optimistic that inserting the individual mandate repeal would be helpful, and that's obviously the view of the Senate Finance Committee Republicans as well.
A prosecution witness in the corruption trial of 3 former soccer officials testified that Fox Sports, Mexico's Grupo Televisa, and Brazil's Globo paid bribes to secure television rights for soccer matches. The testimony came during the first trial to emerge from the U.S. investigation of corruption surrounding FIFA. An auction house in England is selling a unique gift, a family of 4 woolly mammoths dating from the Ice Age. The 4 were found together in Siberia in 2001, and they appear to have died suddenly, all at once, and that's never been found before, so they're expecting it to fetch quite a sum. The auction is set for November 21st. That's the news update, Kelly. They're hoping that they can glean some information about the end of the Ice Age, because it's very rare to see an entire family.
That would be
like
cool.
That. It would.
Yeah. Go
Back to
kaput. Thank you, Sue. We'll see you
got
later,
it.
Sue Herrera. Let's take a look at how we finished up the day on Wall Street. We had declines, but they were nowhere near as large as the declines on the open. The Dow finished lower just 30 points. The S&P was down 6. The NASDAQ down 19, and the Russell's down about 4. Utilities, by far the best performer today. Let's get to some of the other big stories today in our rapid recap.
Retailer Advance Auto Parts among the companies reporting quarterly earnings this morning. The company earned $1.43 per share for the third quarter. That compares to estimates of $1.21.
Dick's Sporting Goods beating across the board for the quarter, but next year's guidance implies a profit drop of 20%.
Home Depot's the other big number, raising full-year guidance, better than expected quarterly results, helped by a 7.9% jump in comps.
The people that rely on that dividend, especially the people relying on this for current income, this is a very, very tough measure. And so it's not anything we took lightly. I looked at this in very great detail.
In the House version, because when you look at state and local tax deduction, we keep the mortgage deduction. What we did was we added $10,000 for a property tax deduction. I do not believe the Senate version could pass the House without some working and reflection upon those SALT states as well.
Your new survey says individual investors are the least bullish they've been in stocks in the survey's history.
Very simply, the stock market is overpriced and people think it's overpriced.
Least bullish in Schiller's survey?
In Robert Schiller's survey, yeah. He's been for a long time keeping these monthly surveys of both individual and professional investors. Because it doesn't necessarily fit with other sentiment readings.
Exactly. Which at least as of a couple weeks ago were way high.
It's a long-term sentiment measure, just the sense that there's not a lot of bargains.
Sort of a rolling average or something like that.
Well, meaning that it's sort of it's a effectiveness. If it really does take hold as a contrarian sign or something, is longer term.
No, but once we saw how extreme the sentiment, just a regular bull bear set, this pullback is no surprise once you reach those kind of levels. We have a news alert on IBM here. Leslie Picker, what's happening there?
Hey, Kelly, that's right. This comes from the 13F filing from Berkshire Hathaway. He is slashing his stake in IBM down 17 million shares to hold about 37 million total. That's a 68% decrease, Kelly. Now, he declined to say in an interview with CNBC earlier in the quarter what he would do with his with his IBM stake, but he had been paring it back over the previous quarter. So now we have an amount 68% decrease in IBM. That's Berkshire Hathaway, which is led by Warren Buffett. Kel.
Thank you, Leslie. I don't know if we can show maybe a 6-month price chart of IBM to look at.
I mean, I'm looking at it right now. I mean, the third quarter, which presumably was when he was doing his selling, it was pretty much around its lows for the year, around 140, in the 140s, let's say. So he by no means, took advantage of a bounce in the stock, which it did have in the first quarter of this year.
Right. I mean, in interviews with Becky, time and again, he did not make it sound like he was never going to touch those shares. I mean, he was starting certainly to come around to this idea of I'm very disappointed in what's happened and sort of joking about maybe not understanding what was happening there.
Exactly. He kind of had I think placed it in the loss column to the extent that he has a loss column, and so I don't think it's a surprise that he definitely.
Still, he doesn't exit things often or lightly, and so to see him reduce the position by that much just feels like this is a guy willing to give a company a very long period of time to figure these things out.
I know. Clearly, he wasn't impressed with what the way forward looks to be here, especially because he's sitting on so much cash. He doesn't actually need to harvest anything to go invest in a new idea.
That's true. It's going to put more pressure. We don't know if it's possible he's still selling it down. Of course, this was only as of the end of September. But if he's going to liquidate the position entirely, you don't have that Buffett premium on a stock like IBM.
Yeah. Well, on the other hand, it didn't help IBM along the way while he was in it. So we'll see how it goes from here.
The IBM shares unchanged after hours. Time now for the takeaway. We begin today with speculation that Coca-Cola is going to make a move into the spirits business. Wells Fargo's Hitha Herzon upgraded the stock today, raised her 12-month price target to 51, and said alcoholic beverages and coffee could be added to the Coke portfolio. As part of the CEO's mission to innovate, Coke holding an investor day Thursday. Michael, do you think this kind of departure is likely and is imminent?
I don't know about imminent, but I definitely think it would be considered an add-on. I mean, not necessarily a turn away from the core business, but I think it's this environment where Coke has come to right now. It seems like it's in the realm of possibility. It's there was a time when it would seem like it was just a little bit too risky to be next to the Coke brand this way. But I know very selectively Coke has advertised itself as a mixer. Coca-Cola itself, like with rum and things like that. Also, you look at the way the alcoholic beverage market has gone to, and it's looking more like soft drinks.
By the way, AB InBev, which did a management shakeup this week, still there's speculation that they would buy Coca-Cola, but the price is too rich. So it's interesting. I wonder if it would ever go the other way, or if they're looking at much more.
It's a big bite, obviously, but also the fact that Coke is involved with Monster as an investor, that's an edgy brand. I mean,
and it's
obviously,
been a Monster.
They're willing to have these brands be on their own outside the Coke.
Monster is one of the few trading all-time highs even in this weaker market. Coca-Cola CEO James Quincy will join Squawk on the Street Sarah Eisen in a CNBC exclusive from the Atlanta headquarters for its Investor Day on Thursday. That'll be at 10 a.m., so mark your calendars. Next, has Apple's Face ID been hacked? Researchers in Vietnam say they fooled the system with a $150 mask they only worked a week on. Skeptics say they haven't released enough details to prove it was a genuine hack, but these same researchers apparently pulled off a facial recognition hack of laptops a decade ago. Mike, what if they pulled this off too?
Well, obviously Apple knew that somebody's going to try this, right? I mean, and so not to say that it was going to be foolproof, but I do think that it's one of those things that you have to go to these great lengths. You have to be kind of, creating a facial mold of a particular person, right? It's not as if randomly they could grab your phone. So,
no, but I agree with that point
said,
because the idea that it's been hacked makes it sound like it's indiscriminate and can happen remotely. And you'd have to have at least half the person's face, it sounds like, and go to all this trouble to recreate it.
Right. So obviously there are hurdles, but it's not foolproof. And I don't think Apple ever said it was foolproof, right? They said it was something like, what was it?
Like
95.
Yeah, there was some small percentage.
1 in a million or something. They made it very general. Well, that means there's 6,000 people in the world who could unlock your phone by looking at it.
Scary thought. And certainly if you're a high-profile target, someone stole your phone and went through all the trouble of making, the Donald Trump mask or whatever, you can see the problem. Finally, after shares of French telecom giant Altice plunged over the past week, today its U.S. subsidiary had a sizable drop of its own. It closed down about 8%. This after filings showed Jana Partners exited its stake in the company, and after Morgan Stanley slashed the price target of the parent company today, along with its cash flow estimates, raising some concerns about its massive debt levels. What now for Altice?
All coming after, some pretty poor numbers. People are concerned about a grab bag of things, including the fact that it's always been a very highly leveraged balance sheet. And if you have kind of the top line flagging a little bit, where you basically have broadband cable business that is not necessarily growing, you start to worry about the debt load. They are known as a ruthless operator in terms of costs. And so once you get to the end of that point, maybe the question is what's next. So I don't know if there's a bigger story beyond that, except that, it seemed like it was a little bit more of a risky balance sheet that.
And maybe the issue is it gives them greater urgency to do a U.S. acquisition while less capacity to do.
That's right.
So.
Yeah, exactly. I mean, it was always sort of predicated on being part of the consolidation story. So we'll see if there's many options.
Yeah, there's a lot of balls in the air in that space right now.